Ladies and gentlemen, welcome to Creating Tailwinds Podcast by Flight Path Financial with your hosts, John Urbick and Jared Adams. Join us today as we discuss the power of infinite banking. And here we go.
Hello there, John. How are you today?
Good morning, Jared. I'm doing great.
Great
How
to hear.
have you been doing?
Doing good. Doing good. Another beautiful morning. Loving some of these springtime temperatures here, South Atlanta. Enjoying the sun on my face. I had a good friend that we were talking to that's up in Minneapolis, and they just got a monster snow and ice storm. I cannot do snow in the springtime. I have someone that grew up south of Buffalo, New York. I just can't do it anymore. I've had my fun in the springtime snow.
I still love the snow, Jared.
Oh.
That's why we're a great tag team, because we operate on opposite sides of the spectrum sometime, but that's a
right.
good thing.
It is beautiful to look at. It really is. I just don't miss driving in it.
I know. Well, yes, I used to fly up into Buffalo, and I remember going up there one Christmas Eve, and I literally was taxiing, and the snow was flying past the windshield. There was so much snow on the ground in Buffalo. I go, what? I didn't know there was this much snow available in a single downpour of snow.
Right. It does dump up there. There's no question. That reminds me of a fun, like, how many people get to see that from the front of a plane when you're going on takeoff or on approach or something, when you're down in that layer where the snow is actually falling? And it kind of reminds me of Star Wars, right before they go into hyperdrive.
Oh,
You've
yeah.
got all these, snowflakes or pellets just cruising by your windshield. And how I just think that looks super cool.
No, I agree. It is one of the most surreal, incredible experiences is to flying in the snow in a snowstorm. I just think it's going to be some of my best memories of flying is going to be that kind of flying.
Sure,
it's just
for sure.
Incredible. But you've been traveling. What's on your radar?
We haven't, other than the Orlando trip that we did recently down to Think Tank, we haven't done a ton of traveling, but every year, as soon as school gets out, we plan a little summer vacation with the kiddos, and it's not always the same place. We try to just go somewhere with just the five of us and go have fun and just be together. And, it's kind of I'm hoping looking back, it'll be a fun memory for the kiddos. I know it's not always positive for them. They get a little frustrated sometimes, but trying to make something that's both fun and educational. So we've been looking forward to what that planning looks like. So yeah, it's fun to always plan that out and get that going.
I think that those are some of the best family memories, at least for me, the stuff we did with our kids when they were young. And we always believed in experiences over the classroom, really. I mean, classroom's important, but the people you meet, the experiences you have, the books you read, that's where life lives. And we have just done so much together, and I know you have with your family too. And I would encourage everyone out there, man, if you get an opportunity to get away with your family and go explore, do something new that you haven't done before, do it. Just do it.
Yep, that's well said.
Yeah.
Well, picking back up right where we left off, I think it was the cost of acquisition was the pickup spot. We're just about done with the book. We're almost all the way through of Nelson Nash's Becoming Your Own Banker, and it's been a fun journey to kind of pick apart some of the high points that we've enjoyed or that we like. And cost of acquisition. What's your thoughts on that short page that shows up there in the book?
Well, it's just one page, but it's very important because it's a concept that everyone who gets into infinite banking needs to realize that infinite banking is a business. You're in business for yourself. You're the banker. And so as such, there are costs of acquisition. I mean, you look at when we get into any business, we talked about the coffee shop. That's the easy one. Before you sell one cup of coffee and make a nickel, you're going to buy the product. You're going to pay for your rent for the building. You're going to turn the heat on. You're going to pay for employees. All that stuff goes into the cost of acquisition. The same thing happens on the money side. When you want to borrow money to make something happen, you go to the bank. Lee Iacocca famously talks about it in Nelson's book. And he said if he knew what he was walking into, he wouldn't have done it. But he did, and thank goodness he did, because Chrysler was a complete turnaround because of him.
Sure.
But you're reminded that he only had a government-backed guarantee. And then the work began of going to the banks. This was with Chrysler when they were looking at bankruptcy. So we do the same thing. We go to the banks and we negotiate, and the stronger our position is, the stronger our arguments are, the better terms we get. Well, we can create our own terms with our infinite banking policy, and we
Sure.
can, in effect, control a good part of that cost of acquisition. That is huge for us.
Yeah, and I like how this kind of shows up at the end of the book as well, right? Because he hits on this in the beginning with the grocery store story, talking about how you're not making money on that single can of peas until you've turned it over 17 times. And then he comes back here near the end of the book and goes, "Hey, just a quick reminder, don't forget, you've got to capitalize these programs. You've got to capitalize these products to become your own banker." So I appreciate the timing that he uses on that.
Yeah. It's so important to understand how powerful this is, and meaning the infinite banking concept, having your own banking facility. It functions. Nelson talks about if you're not in command of the banking function, you do not have to go through all the expensive erosion, which is dealing with the bankers and, oh, we're going to hit you with another 50 basis point. And there's another fee here and another fee there. The infinite banking concept is exactly this. You can make timely decisions, and there is no cost of acquisition. Think about that. It's
Yep.
huge. As for a business, it's huge. Every small business ought to be looking at this.
Spot on. The erosion piece is such a powerful word. I mean, that's just something that happens naturally as the rain falls and as the winds blow, and yet you can't stop it. And then here you are looking at an opportunity where you can. And it's but it does you have to capitalize. You have to include that cost of acquisition as you're building these policies.
Yeah, you're in business, and if you approach this like a business, any other business that you know an awful lot about, and you give it that same attention, you're going to do very well with it, Jared.
Sure. Sure.
So, but yeah, that's really what I thought we ought to hit with the cost of acquisition. We could probably go on and talk about the higher rate of return argument that everyone always seems to throw at infinite banking when they don't understand what it is. And once they understand it, then they go, aha. And it's getting them to that aha moment.
This is a favorite for me because this would have been one of two reasons as why I didn't do this 15 years ago.
Right.
When I looked at it and saw the quote unquote cost of acquisition or cost of just getting these started, and I thought, wow, that was too expensive. Not to mention too expensive. I was not going to be able to see a similar rate of return on paper that I would in some mutual fund somewhere or even an indexed fund. And so I know that this one is kind of near and dear to my heart in terms of where it hits home on when this sunk in and when I got this. This truly was one of the factors that prohibited me from getting this 15 years ago. And I wish I would have just done a little bit deeper dive 15 years ago to know, you know, what's really going on behind the scenes and also how my look at an S&P fund on returns compared to returns inside the policy, to know that that is not even close apples to apples. When you look at these in the terms of dollars returned, you can't compare them that way. The other thing that shows up in the book is that Nelson would say the only way that a person can get a higher return is by ignoring the banking process. What he's saying is there's no way for you to get a higher return if you ignore the banking process.
Yeah. Yeah. Right. Yeah. And he talks about this right out of the book. This is page 69 in Becoming Your Own Banker. We are not addressing the yield of an investment. We are discussing how you finance anything you buy. Really have to spend some time thinking about what that means. It's about cash flow. It's always been about cash flow. And if you can control the cash flow in your life and not delegate that to some other entity, you benefit directly from that. All that money flows back into your personal economic model. It is huge. Look at what's going on today. I mean, everybody's freaking out about the markets, right? Because the tariffs. Here we are at
Yep.
first week in April, and the market was down 1,000 points yesterday, another 1,000 points today. I don't know how far it'll go. It doesn't matter. It will come back. It definitely will come back. And what you're seeing is a knee-jerk reaction that always happens when there's a tectonic or a major shift in market policies and
Sure.
economic,
Yep.
realities. And this is tectonic. Trump's coming in. He's doing all these things. Some agree, some don't agree. But actually, from the vantage point, when you start thinking about what's going on out there, that the top 10% of Americans own 93% of all stocks. right?
Yep.
So when you start thinking about this, is this really turning out to be a brilliant play? Doesn't feel like it. But look at treasuries. Just in the last week, treasuries are up 5%. And those things move inversely. Where does money flow when it leaves the stock market? It runs to treasuries. So
Sure.
what's happening under the sheets, so to speak, is that he's driving down interest rates. Those are going to percolate to everybody. People who are in the stock market and certainly to people who are not in the stock market and lower prices. You know, eggs were cut in half, right? That was the big laughable topic not long ago. But as the 10-year treasury year to date, man,
Yep.
that thing is that the treasuries are up on the 10-year 31 bits, so 31 30 seconds. It's almost 1%. It's yielding today 3.94%.
Sure.
That is billions and billions of dollars out there in finance expense. And so that's what's going on behind the scenes. So where am I going with all of this? As the money is flowing, as the chaos is hitting, I'm capitalizing like a mad dog my contracts so that when the dust settles here, I'm going to be in a position to move quickly. I cannot move quickly if money is tied up at the banks and they're trying to figure out what's going on and who they're going to give money to and what committee is going to decide my fate. I'm going to decide my fate. I have absolute control of my money, and that cash flow component is everything in your personal economic model. And those that look into this and those that take full advantage of building their own infinite banking concept modeling financial program
Sure.
are going to just kick butt.
Yep. Well, isn't it also kind of a concept of, I don't want to call it anti-inflationary, but as money leaves the stock market and goes into treasuries, it's backed by something. Now, I wouldn't prefer that to be my bedrock is the federal government, but it is still backed by something. So it's not sitting in the bank being used and leveraged for multiple loans. I mean, we've talked about this in previous episodes, how it becomes inflationary by nature. So as it flows into the treasuries, isn't that kind of anti-inflationary in general?
Well, yes and no, depending on what angle you're coming at it from. But as far as the treasuries are concerned, look, the U.S. government is not going out of business. Are they way underwater? Yeah, they sure are. But they have the power to print money, which is inflationary. But
Right.
the thing about it is this whole effort, we've got, I think it was $6 or $7 trillion in the past few weeks have flowed into the United States as investment businesses that are coming to manufacture in this country. Once that happens and once that takes root, I mean, trillion, not billion, $1 trillion.
Hmm.
That is going to create so much economic activity, jobs. When people have jobs, they spend money. You create an increased velocity of money, and an increased velocity of money drives other sectors of the economy. This thing is going to move higher. It definitely will with what's happening. So put on your seatbelts and get ready. But I would be capitalizing myself big time right now to get ready for opportunities because opportunities seek out money. They seek out capital. And if you don't have any, or you're relying on a credit card to go put some, buy something, they can shrink that from 50 grand to 5 grand overnight. Don't forget that.
Sure.
But if I control the capital and I'm the first guy in line for the use of that money, which you are with an infinite banking contract, you are first in line to use that capital before the insurance company. It's in the contract.
Sure.
This is so powerful.
Yep. And hard not to at least mention a little bit I know we've hit it on multiple times, this uninterrupted compound growth.
Yes.
When they lose 4%, 5% in one day,
Yeah.
that erodes away at what you have to make back in order to get back to just even. And yet every single day that you have an IBC contract, it grows. Now it doesn't show up in the form of a dividend that's again not guaranteed, but the dividend that shows up at the end of the year pays once. It pays annually. And we typically have it set up for it to buy more PUAs so that it goes towards both the death benefit and the cash value to become a powerful entity. And yet every single day you grow. And which is why I've said in the past, folks are, losing their mind over losing 4% or losing 10% year over year. And yet here we are in these contracts that you're able to put a positive percentage point on it every single day. And whatever it starts at the end of year 1 or year 10 is the starting point for year 2 or year 11. And so
Yeah.
that uninterrupted compound growth is a very powerful asset.
Yeah, and just to one clarification on something you said, and I
Yep.
know this is what you meant, but it's the policy year is not the calendar year. It's from the date that dividend is paid on the anniversary date of your policy. So it could come in
Yes.
January, February, March, whenever. But
Yes.
I know that's exactly what you meant.
No, no, I appreciate that clarification. So if you start a policy in June, the following June, the premium's going to be due if you're paying annually. And then that June is when they're going to issue the dividend from the year prior.
Of course, exactly
Yeah.
right.
Yep.
Exactly right.
Thank you for
And so
clarifying
just
that.
curious. Oh no, no worries. And so I was curious, Jared. Did you lose any money yesterday or today in your contracts?
Not in the contracts. I mean, I've got some money that are in 401k accounts that, they've been built up over 2 decades. Those took a pretty big hit. But in terms of my personal family contracts and personal IBC contracts for our family, never lost a dime.
Yeah, pretty cool.
Yeah, it is
Pretty
cool.
cool. And
The other, I'm
if
sorry,
you
go
wanted to
ahead.
access that money in your contracts, if you wanted to go get a 401k loan because you needed the money, you're limited to 50 grand or 50% of the balance, which is ever less, right?
Yep.
How long does it take you to get that money and what's required? Do you have any idea?
I'll be honest with you. I've never done a 401k loan, but the people that I've talked to that have said that it's a little bit of a process to get going. Almost a week to two turnaround from when you've actually submitted the application to speaking with someone or conversing online and then getting that to show up in your account.
Yeah. I mean, so you could have $1 million in there, and the most you're going to get out of there is what, 50 grand?
Yep.
And you get, yeah, it's crazy. And then if you take out a policy, not a policy loan, but you take a 401k loan out for, say you only need 10 grand. So you take 10 grand out. Now at some airlines, that's it. You have to pay that all back before you can take a second loan. So let's say you wanted to go after the other 40 grand. You had an unbelievable opportunity. You're going to do something silly and you're going to do a 401k loan because it's double taxation. Generally, it's the last place you want to take money. But let's say
Sure.
you needed to do it for whatever reason. Well, you couldn't even get at that 40 grand. So you got $1 million sitting there. You've got 10 grand outstanding on loan and you cannot get at any more of that money until you pay that 10 grand back. And oh, by the way, that 10 grand comes off that 50 grand mark and your maximum amount of loan is less that amount, meaning you can only take 40 grand out for that next year because you've already borrowed 10 grand even though you paid it back.
That's right.
Think about the
Not
restrictions on that.
not to mention that 10 grand that you loaned is no longer accruing whatever it would have gained while
Exactly
being in the
right.
market. You have completely cut back, whether it's by 10 grand or by 50 grand, you have reduced the amount that is the baseline of which you're going to continue growing off of.
Now let's say that same $1 million you had in cash value sitting in an IBC contract,
Yep.
and you can get a hold of 95% of that money. So even at the 90% mark, you have access to $900,000 of that money versus in the worst case scenario, 10 grand in a
Sure.
401k. I mean, it's
Yep.
just absurd.
And if
And
you're
you're
to borrow $40,000 from that on day one, and then you find out that you need another 20 a week later, you can go dip into the another 20. Same thing, you get another 100 the week later,
from the
you get another 100.
from the insurance contract,
That's
from cash
correct.
values.
That's
Yes,
right. Not the 401k loan. That's right. So there's literally infinite amount of availability in terms of what you can do with these cash values that you build. But we have to caveat that with the understanding that you got to have a plan to pay it back. This is not free
true.
money. You've put
Nope.
these, just like we said, the cost of acquisition, right? You have built these policies up. You have taken the discipline to build these up year over year into a spot that it's got a huge impact for your family. But you don't just take it out for free money.
No, absolutely right. Couldn't agree more, Jared.
Well,
All
maybe
right.
the last topic for today they go into is the even distribution of age classes. So they talk about, really they dive into the forestry piece here. Um, what's your take on this talk about age classes and how you can kind of ladder these different policies over the course of your lifetime?
Right. Nelson was a forester, and he talks about developing a forestry plan where you're planning it out over a series of years, and it takes 40 years to get to the point where, and you're rotating crops. You plant one, then you plant the next, then you plant the one next after every 5 years, and so by the time you get to the 40-year mark, your forest is fully planted, and you're cutting from the first cuttings, and then the following 5 years you're cutting from the next, and you move this thing forward in a rotating fashion, and you're optimizing your cash flow. You're creating a perpetual cash flow circumstance by harvesting from what you've planted, and then you're constantly harvesting and replanting, harvesting and replanting.
Yep.
Same thing. And he's trying to align that with life insurance contracts because, most people don't have 5 million bucks to plunk into one of these things. It's a lot of outlay. But what you can do is you get started and year over year, you add to your system of policy, your system of policies, which is your cash flow system. And so
Yep.
over time, you're not looking a year or 2 or 5 years down the road. You're looking out generationally, two
Yep.
generations, three generations downstream. And so as you build this thing, you're providing a perpetual stream of income for your family in the years to come that's going to do nothing but grow and be useful to those you care most about.
Sure.
So it's just that's what he's trying to get at. And when he talks about classes, there's different classes of trees. And Nelson was great at he was great at oh, I forgot what the term is, Jared, but it's a classification by species, genus, species, and all of that stuff. But as it pertains to life insurance contracts specifically, there's different classifications because I am a healthy 61-year-old male. Another, you're a healthy 45. What? How old? 45?
42.
42. Okay,
Yep.
sorry, making you older.
That's all
42
right.
year old. And then our kids are even younger than that. So the insurance company is not going to apply the same mortality risk to your children as to you and as to me. They're going to be different because we're at different stages in our life. If
Sure.
I have that, one of the things they do is they look at DMV records. People get upset about that. Why do they do that? Well, because if you've got 3 speeding tickets this past year and you've got a history of speeding over 25 miles past the posted speed limit going back 10 years, you are a very high risk factor because their mortality tables say they got a lot of people getting killed that are doing that.
Sure.
And so
Yep.
you're rated at a higher level than somebody who's got a perfect driving record.
Yep.
So,
Yeah, I think it's cool that he brings in the forestry piece. Yeah, my father-in-law, who's no longer with us, was able to work on a 22-acre tree farm in South Carolina, and we would always go visit him and take the gator out on the trails and go see the different half acre or full acre or sometimes even 2 acre plots of whatever tree that was planted X years ago. And they're obviously all throughout these different stages. But each year there is much work and much cultivation that happens, whether maybe they're peeling back a couple of the trees so it doesn't get overcrowded. Maybe they're, going through one of the burn processes where they're clearing out the underbrush. But I think it's just really cool to compare those two into the life insurance contract and how that compares to IBC is that you're not just setting one of these up and then sitting back and watching it on cruise control for the next 40 years. You're truly setting up your system and continually capitalizing your system with the goal of being able to someday be able to cycle maybe a goal would be a 100% of your annual income because you're supposed to be really, really great at your job and banking. Be
yeah.
really great at both of those. So whatever your annual income is, if you're able to cycle 100% of that through a policy, wow, how powerful that is. I mean, if you made $100,000 a year, there's no way you start with one of these policies and drop down 100,000 to then be able to just capitalize and be able to borrow from that. Now, I say no way. It's possible, but you'll have to be sitting on a boatload of cash or had, some sort of a windfall that shows up your way. Not only that, if you did have a windfall that showed up, you probably can't pay the premiums year over year over year because you just dropped it down one time. Am I saying that correctly? Would you agree with how that all shows up on not only how that's set up initially, but a 20-year, 30-year goal?
I think that's right. I think you have to set up a system of spending, but you're spending who you're spending it on. You're paying yourself first, which is always the primary objective of good financial planning. You want to pay yourself first before you pay anybody else. Pay yourself first. Even if you're broke, pay yourself first, because there will always be bills out there. There will always be people out there wanting your money, but you need to take care of you. And so when the chips are down, putting food on the table, a roof over your head, and clothes on your back, that's priority one, taking care of
Absolutely.
your family.
Sure.
Right?
Yep.
Nelson, one of the quotes I like in his book, he says, money won't buy happiness, but poor stewardship of money will steal happiness. It's not about what you make. It's about what you keep. And more
Spot on.
generationally, yeah,
Yep.
I mean more generationally, we want to keep we want to keep all the benefits of our work over our many years and pass it on to who we want, our families and those we love. We don't want to give that to the government for them to spend it on, God only knows what crazy program they've got going today and tomorrow. I'd rather direct those funds myself. And
Yep.
that's what this is all about. This is about arresting control of your finances through the controlling the cash flow that is, otherwise taken care of by the banks,
Yep.
the commercial lenders.
That's spot
Don't
on.
do that.
Yes. Spot on. Well, I
So,
know, you know, personally, but behind the scenes, if you met John or I, we would both claim to be Christians as we are and we practice. But you don't have to be a Christian to put these in place. But I give that as a caveat to lead into the last, quote that's used right from Proverbs that says, "Be sure you know the condition of your flocks. Give attention to your herds, for riches do not endure forever, and a crown is not secure for all generations." And I love the way that shows up in this book to say you have to pay attention to where your capital's going. Or you can just let it go off to somewhere else and you can let it dwindle into nowhere land. But, to tie in the verse there that's saying, make sure you're paying attention to your flocks as to where this is going. You need to know where they all are.
if you don't pay attention to your money, somebody else will.
Somebody else will.
Well, all right. Well, I think we'll end this podcast there, Jared. We've got some great more discussion coming up toward the end of the book, and I think we'll save that one for the next podcast. But what do you think? What are your closing thoughts?
I love it. Big fan of shortening these up a little bit by a couple of minutes, making them a little bit more consumable. Obviously, we love feedback from anybody that's tuning in, listening. If there's something you like or a topic you'd like to hear more about, you can find John or I at the website flightpathfinancial.com, and there's the contact us page. You can find us there to schedule a free consultation to learn a little bit more about IBC and how it might work for you, or you may just ask a question there that we'll address on the podcast. We love to be able to return that and help out wherever possible.
Fantastic. Well said, Jared. Thank you.
Awesome. Thanks, John. Have a great rest of your day. Have a great weekend. Look forward to seeing you again soon.
Awesome. Thank you, Jared. We'd like to thank you for tuning in to today's episode of Creating Tailwinds podcast with your hosts, John and Jared. As always, we welcome your questions and critiques. You can reach us through the Contact Us tab at flightpathfinancial.com. Remember, it's all about how you think. As Nelson Nash has said about infinite banking, give it your close attention, and it can make a radical improvement in your financial future.